Genghis started off in the mid-1990s when a number of brokerage licenses were issued. Previously, you only had 6 brokers on the NSE, and that increased to 20. So previously, it was Town and Country Securities. Then in 2008, the shareholders of Chase Bank acquired it from the owners of Town and Country and changed the name to Genghis Capital. So it started the second cycle of its life. And from a very humble beginning, it grew significantly. In 2012, it obtained an investment banking license. Initially, it was only doing stockbroking, but from January 2013, started doing investment banking, opened up unit trust fund products, started doing transaction advisory products. And by 2015, it had grown, actually won the Stockbroker of the Year award, the Best Research House award from the Capital Markets Awards done by Think Business in 2015. Highly profitable business, I think ranked number 6 in terms of market share. So it had a good story, and then that momentum was building up into 2016, up until Chase Bank was placed into receivership. By placing Chase into receivership, Chase was Genghis's principal banker. So that basically significantly hampered its operations, because now you don't have access to liquidity as a company. But luckily, Genghis was able to continue settling client accounts. And so that's why it continued trading. They did some quick in-house reorganization just to keep the business afloat. Obviously, once your principal banker is placed into receivership, it had a major impact on the business. Not only do you have liquidity challenges, but also there's counterparty risk. So a lot of institutions stopped trading with Genghis, both domestic institutions and international fund managers. So that, if you look at our performance in 2016, if you look at Q1, was very much on track. But from April, there's very little business which was undertaken by the company. So that was a very difficult period. But we remained confident that a resolution would happen based on the different engagements we're having with the regulators and the like around Chase, and you could see it was going to be a process, due diligence, etc. So it took much longer than investors would have liked. I think we thought it would happen sooner, but some of these things take a life of their own. Yeah. So post-acquisition, what have we done? I think, firstly, Genghis is now an independent investment bank. We don't have a sort of like a partner shareholder bank. So our primary loyalty is to our customers. We are here to ensure our clients grow their portfolios. They're able to execute their trades. We offer them advice and assist them meet their strategic objectives. So how do you drive through that culture change that previously you had a big brother, but now you're standing on your own 2 feet? And it's not easy in that sense, because whether it's perception or what, the new investors were not as well known as, say, Chase Bank. So people question, who are these people? Why should we listen to them? Will they be able to survive? Can they actually see this thing through? So you start off by meeting that sort of, call it resistance to change. And here you are telling us we need to do things in a particular way. But I think over time we've started rebuilding that confidence in people, that especially the staff, that you can be a successful independent investment bank and work principally for the best interest of your customers. Our vision is to see that, first, there are 3 key products which we offer. There's the securities trading on the Nairobi Stock Exchange, both equities and fixed income. and we are big players in both those segments. That is also supported by the research function, which has been quite prominent in terms of issuing reports, and they're extensively covered in the media. So that's one part of the business. And we have the second part, which is the transaction advisory business. What the transaction advisory business does is basically it helps originate transactions, structure transactions, raise funding, advise on mergers and acquisitions for clients. And essentially what you want to do is the transaction advisory service will be able to provide the companies that will ultimately come to the exchange to raise debt.
So you grow the business from outside.
Exactly, you grow the business from outside. Then the third part of the business is the asset management. The asset management is quite critical because this is where you mobilize domestic savings and also create a platform for international investors to come. If you look at our market, we've now created quite a number of products, whether they're unit trusts or other structured products. But I still think that the penetration has not reached where it should be. Our total unit trust industry is 55, 60 billion shillings. It's very small if you compare with the funds, say, in the banking sector, if you compare with the funds in the other, even in the pensions. Pensions is 1 trillion shillings. Unit trust is 60 billion. I think people are saving in this country. Maybe they're not saving through unit trusts. Maybe they're not saving through licensed intermediaries. But so everyone, in a sense, has now defaulted to the money market product, and the money market is more for low risk, low return, high liquidity products, and that's why they all look the same, and you just compete on what's your yield. But what about other asset classes, which are potentially higher risk, but also higher return? And I think that's where some of our new products are going to focus on. We have submitted applications for about 3 new products on the wealth management side. We're just awaiting for CMA to give us the go-ahead so that we can start actively marketing these. I hope we can do this even in this Q4. But what it's trying to do is say you can create products which have give clients exposure to other asset classes. For instance, we end up having a lot of private equity type transactions, which the local retail investors are not able to access. But some of the high net worth investors and the like have real appetite for this. So you can become an aggregator of that capital. There's a lot of, call it high risk debt as well, which gives people higher return. The most important thing is to be able to explain to people that these products have certain risks and to market them to the right investor so that who have the appetite for that risk. Because people are making 20-25% return in our market by playing in some of those asset classes. Real estate as well. How do you help mobilize domestic savings to come into that through the capital market framework? And you'll see us roll out this quarter, hopefully. There are certain products which have already come to the market. For instance, we had the first gold exchange traded fund. We had the REIT, which came maybe 2 years ago, and they're still work in progress in some of the areas. But each of these products also, there's a lot that you need in the ecosystem. You need to ensure it's not just launching the product for that sake, but how do you actually get the investors to start buying them? And one of the big constraints with some of the new products is that the mandates that fund managers have do not allow them maybe to buy some of the products. So even if you're starting out a new product, but people don't have the mandate to invest in it, then it's good, it's available, but then you have no liquidity. We had a meeting last week. CMA hosted the capital market soundness workshop for Q3. And one of the big discussion points was you need to get all the stakeholders together as you're developing new products so that capital markets doesn't run ahead, but you're looking to tap into money, say, from the insurance industry, and the pension funds, which then cannot invest in some of these products. And you see, some of these products, by their very nature, they're sophisticated. So you may not on day one sell them to retailers, but it's the money managers who need to come in and support them. But if their mandates stop them from or prohibit them from doing that, then there's a lot of that stakeholder engagement that needs to happen so that you align all the regulations to accept the new products, and then that way you can have liquidity. Also, you have to look at what are some of the ramifications of these products in terms of how even just the accounting treatment works. Because someone may want to buy a product, but he looks at IFRS 9 is coming up next year, valuation of financial instruments, will that create more volatility? Then the guy looks, the product is good, but I don't want this volatility in my P&L. So you're then stuck. So there's a lot of consideration that has to be done in some of these new products and ensure that you bring stakeholders together. But also, I know some of our peers in the industry are working on something like asset-backed securities, which are likely to come. Maybe Q1 next year, you'll see that as a new investment class. I think one has to look at what the CMA Act says and what is the mandate of the CMA. A lot of people invest. So, for instance, they're chairmans. They don't have to go to the CMA. And for me, that's the key thing, that if the regulations or the Act requires certain lines of businesses to be regulated, then they should be regulated. Yeah. There shouldn't be an exception for anybody, because then again, I don't think anyone can start taking deposits if you're not licensed by the CBK. So it's just that consistency in the application of the regulation. I think you can. If you look, Pamoja was not doing licensed business previously, Pamoja Capital, our old firm. We were advising private investors on mergers and acquisitions, and we were not doing anything within the capital market space. It's not illegal. So it just depends, the line of business you do, what is the requirement of the law in terms of that business. If that business should be regulated, then that should happen. But no one should be allowed to do, it's just like we're having these issues with gambling, where there are all these slot machines which are not licensed, and they're executing business without the necessary license, and I think the government is looking to clamp down on them. You should expect to see a market-leading investment bank, very strong across East Africa, leading all across all the products that we are working on, and being recognized as being one of the most innovative investment banks. And what would give us great satisfaction is to see some of the companies who we started off with when they were small SMEs becoming real giants in the local economy, being on the stock exchange and ensuring that their paper is available for investors to trade. Because I think our work is to link sources of money with the users of money and put them on platforms where investors can access them directly. So that would give us great satisfaction.